Hello, everybody. Today is May 15th, 2023, and my name is Alex Sasso, and I'm the manager of the NCM Small Companies Fund. NCM Small Companies Fund is our small and mid-cap wealth creation product. So let's start by jumping right into portfolio metrics. It's our opinion, my opinion, that strong portfolio metrics are more important than any time today than any time in recent memories. And so why do I say this now? Well, there's a bit of a capital allocation tug of war happening in the markets right now. Will there be a recession? Did we escape a recession? Have earnings bottomed? Are money market yields attracting capital away from fixed income securities? Are they attracting capital away from equity securities? Is China slowing? Is the US accelerating? Who wins when China slows and the US accelerates? So is inflation dissipating to the Fed's target? Anyways, I think you get my drift. There's a lot of tough questions right now. And if you take a strong, hard view and position yourself in one of these corners, it could mean that you're right and you're a hero, but it could also mean that you're wrong and you're a zero. So the way we're positioning the fund is that so that we could take advantage of most of these different outcomes. And one way that you do that is by making sure that your portfolio metrics are really strong. And so I'm a big believer that if you have a portfolio of stocks that grow faster but are better valued, over the course of a cycle, it just means that you've mathematically increased your probability of outperforming. So in terms of metrics, now, these metrics that I'm going to quote you are according to FactSet. They're as of April 2023. And then once you hear them, I'm sure you'll agree with me that the NCM Small Companies class is continued to show really strong growth metrics despite its inexpensive valuation. So the forward, one of my favorites is the enterprise value to EBITDA multiple. It's 8.3 times versus the BMO small cap benchmark, which is 10.8. Now, what is the enterprise value to EBITDA multiple? It is the market capitalization that the market is giving that business plus the debt in that business divided by the EBITDA, and EBITDA is earnings before interest, taxes, and depreciation. So it sounds complicated, but really what we're trying to do is we're trying to value these businesses on a level playing field with all the other businesses in their industry and all the businesses that are in that BMO small cap return, that small cap index, sorry. And you can see that the NCM Small Companies Fund shows very well there. Now, you know, the other metrics that we really like is your return on equity, both your trailing and your forward return on equity. And our numbers are north of 20%, which is a very strong showing. The BMO, again, is at 10% for both the current year and the forward year. And both of those time periods were north of 20%. So again, that implies that the companies that we have in the portfolio are much more profitable, and that assuming that your price to book metric stays the same, that you should recoup your investment in that business much more quickly, or that it is growing, it's growing its book value that much more quickly than the broader market. So the other favorite metric of mine is the free cash flow yield, and the free cash flow yield is 9.6%. That's a really strong showing. Again, the benchmark 6.7%. And why free cash flow is so important to me and to us here at NCM is because it's one of the best predictors of future stock price performance of any of the metrics that we've quoted today. So it's again a strong showing at 9.6%. Now, the other important thing to note about this fund is over 60% of the companies that we hold in the fund pay a dividend, and the expected dividend per share growth rate is expected to be 19%. Again, really strong showing, and it has a 42% payout ratio, much better than both the index and I suspect the TSX as well. Our average company is growing its revenues and earnings at a much faster clip than the index. So we look at not necessarily just 1 year numbers, we look at the 1, the 3, and the 5 year, but what I'm quoting you here what I've got documented here is the 3-year, and the 3-year, our revenue line is growing faster than the index, and our earnings line is growing faster than the index. So when you put all this together and you hold these type of businesses over a business cycle, again, you're just improving your likelihood of outperforming. And that's really what portfolio management is, and putting together a really good quality portfolio, regardless of what happens on the geopolitical side or the short-term economic side of things. Now, the fund holds 35 positions, and our top 10 make up 40% of the fund. And there really hasn't been much change to the top 10. Major Drilling's our biggest position. Dakar Systems our second biggest. Martin Ray is our third. Now, the fourth position is a new name. It's not a new name. It's new in the fourth most weighted slot, and that's North American construction. And the reason it is because it had a really good quarter, provided really good guidance and a positive outlook commentary from management on the call. So the stock had performed well. Now, with many of these companies, we call them our mini blue chips, and we think that tomorrow some of these will be, tomorrow will be the TSX blue chips. We've seen it in the past. We think it'll happen again, and many of them will be takeout candidates, frankly, because our experience tells us that these companies with these kind of metrics eventually catch the eye of large cap conglomerates. So I'll keep it short and sweet. If you have any questions, please reach out. We're happy to answer them. And you can reach out to us, to your regional salesperson at ncminvestments.com. Thank you.